Hey guys, what's going on? Coming at you with a Thursday morning video. So today I just want to talk about Tesla earnings that came out yesterday. After the bell, this was super important news based on the Netflix earnings. If you guys haven't, I made a video about that yesterday, but if you just a quick summary, they've really missed on subscribers. Their growth is dwindling down to less than 10%. They're talking about making a lower subscription model to get new users and run advertisements on it, which the CEO was always very against. That market in general is getting very competitive. So it's a very, they kind of set the bar, and they're a massive company in the NASDAQ, and the NASDAQ, especially yesterday, got destroyed. So a lot of my companies are in the NASDAQ or mid to small caps or anything affiliated with that segment in any way. It just really put a toll on those stocks yesterday. So I saw a lot of pain in my portfolio yesterday. But on some more good news, Tesla had all its weight on itself today because they kind of set the bar for this industry, and they're the first ones to report Q1 earnings. And they literally crushed it. Like A+, like this is my biggest stock and this is why it is. I've been a shareholder of Tesla since 2019. It's just a stock I can't see myself selling. I really can't. Whenever you think they're done, or whenever you think they're going to slow down, or think they're going to disappoint, they literally just execute and they do better than what anyone expects. So overall, the earnings call, was great. The earnings report was great. It obviously Tesla after hours rallied up 5% roughly. Not a huge deal though. I mean, that stock fell 5% during the whole trading day. So, but still, it gave the market hope that Q1 2022 earnings could have a lot of good in it based on that Netflix that had a lot of bad in it. So it's kind of balancing out. But I personally think the Netflix thing was more of a pandemic play. That space is getting so competitive, and Netflix is kind of just being complacent. They're not really doing anything special or different with more competitors. So that's what happens. You lose market share. Anyways, that's my opinion on that. Tesla is obviously the industry leader in EV vehicles. They're getting into, AI, they're getting into robotaxi. There's so many things they're getting into in the future. They're just exciting, and they're so far ahead of everyone else, which is why they keep surprising people and executing and killing it. So yeah, Q1 earnings, they destroyed it, came out yesterday after the bell. I recorded this video the night before, so we'll see what the market does today in about an hour and 15 minutes. So if I had to guess, looking at this overnight, thinking about it, recording this video overnight, I think we're going to have a nice bounce back tomorrow after that heavy sell-off, because we have this good news here. Obviously, more companies are going to report tomorrow. Some big ones are coming up, obviously, next week. We got like PayPal, NVIDIA, Google. We got some real big ones reporting. I know next week, like Tuesday and Wednesday in particular. So some notable things with the Tesla earnings: the year-over-year revenue growth was 81%. Obviously, they're scaling out massively. That's not sustainable, and it's going to make the comps very hard for next Q1. They're not going to probably get into this. I'd be amazed if they did. They did in the conference call. Elon did said they're still going through supply chain issues. They're having struggles with that still. They think they're going to, sell 1.5 million cars delivered and sold this year. They did raise their costs about a couple months ago. Obviously, supply and demand is really strong. We have to see what happens in the back half of this year and into next year, and how inflation's doing, how unemployment is. There's so many what ifs, but you got to kind of take it earnings by earnings. And as a long-term investor, even that worst case is all short-term noise. Long-term, super bullish on this company. It's going to be, in my opinion, it could be one of the biggest companies in the world one day in the next decade. So awesome. It's tough comps next year, but they kind of were at everyone's shoulders and eyes were looking on them for this earnings, and they definitely killed it. So that's good for the market. It's good for the morale. Their margins actually were amazing too. They somehow beat their margins prior. So last earnings, they were at 29%. The earnings prior, they were at like 25, and the earnings prior, they were at 20. So every single earnings, they're raising their margin. So 30% margin with the no tax credits applied is amazing. So if you're not familiar with the automotive industry, like GM, Ford, Volkswagen, all those guys, their margins are like between 5 and 8%. So not only is Tesla excelling heavily in the EV space, and they have probably almost a decade of technology in front of everyone else, but their margins are like 4 or 5 times better than the average manufacturer. So between your margins being better and you pumping out the most EV cars and being the industry leader, like, they're just set up in their position to be a super, super, super strong player for years and years to come. Do I think we're going to go higher than 30% margin? Maybe. I mean, if they find ways to drive down costs, if they raise the cost of vehicles, it gives them more of a padding. If consumers are willing to spend that premium to get the car still, which they are doing right now, you might get even higher margins next quarter or maybe the following. So you really got to find that balance. But if you're anywhere in my eyes, if your margins are 22 to 30% as a company, I mean, you're destroying the game. I mean, that's a very strong profit margin. So buy or sell this stock, it's right around $1,000, a little over. It was fluctuating around that. We'll just call it 1,000. So my cost base, if you haven't watched my previous videos, it's around 160. So I have not average cost up one time since I really was building out my position. So if I did not own Tesla, I absolutely would probably buy some just to have some, just get my hands in this company. Being the fact it's my biggest stock and my cost base is 160, I'm not looking to buy right now. I should have bought in the middle of March when it was like 750-ish. I should have. I was waiting for it to get to like 600, 650, which didn't happen, which is fine. I'm content with what I have, but I'd love to buy a good deal, a good deal for this company. I don't think it's going to go back down there personally, especially after this news. They need some super bad news, which is not going to happen, I don't think. Or like the whole market needs to pull back like 20, 30%, which I personally don't think that's going to happen. I'm a little on the dovish side of where I think the market's going in the back half and in 2023. I'm pretty optimistic on everything. So I don't think that's going to happen. So if I were making a new position or wanted to start one, I'd definitely buy a little now. And then if it goes down, just average cost down. If it goes up, you have a position. So that's kind of my thoughts on Tesla, on what I would do. So me personally, I'm not buying. Yesterday, the Dow did finish green, 0.5%. S&P was down 0.06%. NASDAQ was down 1.22%, mainly because of that Netflix pain yesterday that really drug down all the NASDAQ companies, in my opinion. My portfolio was down 2.81%. That's a big red day for me. That's a big movement for the stocks I'm in. Obviously, a lot of them sympathy sold because of Netflix. I don't own Netflix, but I saw a lot of pain in my portfolio, which is fine. I actually did do some buying yesterday. Let me pull up my account. I was actually going to make a video of this. I might make one later, but I probably won't actually. So let me see. So what did I buy yesterday? I bought PayPal at $96.79, about 5% of my portfolio, and I bought Facebook at $202.54. That's a stock that I've owned since, both those stocks I've owned since 2019. So I've owned them for a very long time. Facebook, I actually average cost up. My cost base is around 190, and PayPal, I average cost down. Yeah, average cost down on PayPal. So both added about 5% of my position in both those stocks. So they're two I'm just focusing on. If they continue to fall, I'll gladly buy more of them. I'm super bullish with both those companies in the future. So I did do some buying yesterday on this crash. However, if we get some bad consumer spending reports, or a lot of things can happen during these earnings where it can make people very nervous about the Fed meeting coming up. People are already on edge about it. So you got to have cash on the sideline. You got to figure out what your plan of action is if the market goes down. And I have a plan. Obviously, as I buy stocks, I'll let you guys know and let you know the percentage I bought at. But that's what I did yesterday during all this pain. So that's all I got, guys. Again, appreciate the subs. I think I'm at like 725, maybe a little more now. So we got a decent amount of subs in the past 3 weeks since I started making videos consistently. If you guys like these videos, make sure you guys like, subscribe, comment below. Let me know your thoughts on Tesla. I'm just curious to see what the community thinks of Tesla. If they like it, hate it, buy, sell. It's always good to just put your heads together and just make sure, just exercise ideas. All right, guys, later. Peace.